Hello, I'm Dick.
And I'm Eric, and we're the Annuity guys.
Eric, we're trying to cover the top 10 countdown. Now, we're not trying to be Casey Kasem here.
We're not gonna, but we are going to hit just the top 10.
He was the top 40.
That's right. We're just going to hit the top 10 of those kind of most important kind of fixed indexed annuity questions.
Before you purchase a fixed indexed annuity. And, one of the things that we frequently run into, and that is advisors that kind of confuse folks because
well, some they don't understand themselves.
Right, exactly. So they'll call the fixed indexed annuity a variable, or folks will think they've got a fixed indexed or a hybrid, and it'll really be a variable, or vice versa, because it's confusing. So you have to make sure that you're actually talking about a true fixed indexed annuity and not a variable annuity.
Right. And so how do we differentiate between the two? Well, quite simply, the fixed indexed annuity has some element that's fixed. There's guarantees in it.
Yes.
Which means basically it won't lose any money as far as the investment risk.
Correct.
Now, the variable annuity, unfortunately,
you take all the risk yourself.
And
exactly.
it's going to fluctuate with market returns. Basically. It's going to have mutual fund sub-accounts. So there it is on its simplest level, the difference between a fixed indexed annuity and a fixed variable.
Well, and since we've got 10 questions here to get through, we're going to have to kind of roll through these, that folks should be asking. Ratings are important.
Yes.
What are the ratings of the company?
Yes, and of course, obviously, as you're looking at which company to work with, it's how do you judge one company against each other? And that's really what the ratings agencies come into play with.
Yes.
It's looking at the financial strength. Is this a company that's worthy of doing business with? So it's understanding that, yes, there are A-plus companies and there are B companies, and there's a difference between the two.
Right. And, everyone just needs to, realize that before they make that decision, they should at least be looking at those rating agencies. And we kind of favor AM Best, and we've talked about that in other videos because they've really specialized on the insurance industry over like the last 100 years or so.
And then speaking of the last 100 years, how long has the insurance carrier been in business? And I think that's really kind of one of the foremost aspects of working with a carrier. Have they survived recessions, depressions,
pandemics, and
financial
wars, and then how they fared through the good times too? Have they made good decisions? So
have they rewarded the customers?
Exactly.
Have they protected their policyholders?
And another thing that you don't really want to focus on it, but minimum guarantees are something you should understand about a fixed indexed annuity, and you should ask about it. There's some trade-offs there. Would you want to touch on that?
Sure. And I would say in the simplest form, just know if it starts with the word fixed in it, if it's a fixed annuity or a fixed indexed annuity, it has to have minimum guarantees.
Yes.
And unfortunately, I like to explain it. The minimum guarantees for most of these, if you think of it as being zero on the investment side, that's probably the easiest way to think of it.
Right.
Just know it's a little bit better than that.
You may get a little better.
Now, some companies actually state a minimum guarantee that's a little bit higher than that. They'll have a minimum guarantee that's a 1% of the premium put in. Those companies typically, because they're giving you a higher
minimum
floor,
floor,
the ceiling sometimes comes down a little bit. So it's usually a trade-off on the minimum guarantees. But on most fixed indexed annuities, that's usually not the reason you're looking at the annuity. You're not looking at it for the floor necessarily, although zero is nice in the down market.
Right. Well, it's an important part of the fixed indexed annuity, but what you're really looking for is some additional growth potential, some income guarantees, and so if they're giving you a higher minimum, they're going to cut some of those potential aspects back, or some of the income guarantees. So sometimes it's better to have a little bit less of a minimum guarantee.
Right, and that's really flows into our next question, which are what are the limiting factors of the cash account? And so most of the common ones that are well known are the participation rate, cap rates. Well, in today's world, in this kind of era of volatility controlled indices, the indice itself is one of the limiting factors. And so which index they're actually using for growth may be one of the things that you have to ask about. What are the limiting factors in addition to the caps and participation rate?
And they're always going to, paint a rosy picture, and then they're always going to have some limiting factors because that's part of being able to give you the safety aspect of the annuity and protect your principal. So, one of that. Again, on number 6 here, we talk about the contractual guarantees. And so you want to really pay attention to what those are. And some of the key factors are the income guarantees, a death benefit guarantee, your a potential long-term care or home health care guarantee, and then also what we've just discussed, and that's some of those growth components.
Right.
So, again, each annuity is going to have different contractual guarantees, but these are important to at least have some cursory understanding of how these work and how they're going to affect your long-term retirement.
And for all annuities, I think one important aspect I would say is you buy it for the guarantees.
Yes.
You're looking at it to provide some degree of safety, whether that's making sure that you don't lose money in downturn, or it's the income guarantees.
Right.
That's usually the focus for what most people want, and it's saying, all right, that's the important fee. Can it be better than that potentially? Sure.
Yes.
But let's just make sure that our guarantees take care of what we want it to accomplish for us.
Something a lot of folks won't think about, Eric, is the renewal rate history of annuities.
Yeah. Well, what are you talking about? Renewal rate history? You're showing me an index and a number. Isn't that what it's going to be for the whole life of the contract?
Exactly. You're talking about caps and spreads and participation rates. And annuity companies, they're pretty smart. They give themselves some flexibility.
Yes.
And that's part of those contractual guarantees. They can drop those or they can raise them.
Right.
So it can work in your favor and out of your favor.
Right.
But the key is, what has their history been? Have they been a generous and a fair company?
Right.
Or have they really been stingy and really kind of trapped folks by giving them a teaser rate?
Right.
And this is where a good advisor, that's really fair and honest, can help the client know which companies to work with, not just based on what they're promising up front, but what their renewal rate history has been, the way they've treated people.
Exactly. And as you're looking at the renewal rate history, it's saying, all right, well, did this work? Did this company always try to basically reward the policyholders or protect the policyholders?
Yes.
And that's really what the moving of those rates is about.
Right.
Most companies are not in it to play gotcha. They're not trying to get the most money for themselves. They want to be sure that they're in a financial stable position.
Right.
But they know if they crater the rate, so to speak, everybody's going to leave.
Exactly. They're going to lose their business.
Right. And so they're trying to balance out risk and reward and take care of the clients as well as taking care of the company.
Right. Eric, one of the things that the folks are looking for a lot of times with the fixed indexed annuity, because they are popular, they're a little bit overstated, and everybody's looking for that silver bullet, that perfect fixed indexed annuity.
The best growth, the best income. I want a long-term care, and if I don't use it, I want to give billions of dollars to my kids.
Right, and if I don't use it, I just I want all the benefits, whether I had it or didn't have it.
Yeah, there is no perfect silver bullet annuity. Most of them have a balancing act. They do one thing well versus another. Sometimes the best answer is not to lock in on one option, but to really use a balancing of multiple options to accomplish your goals.
Multiple annuities. And so I think that's one of the questions that folks need to be aware of is, what is the priority that this annuity was designed or built for? What is the optimization of this particular annuity? Because some annuities, like we've said, are built for growth, some for income, some for long-term care. And that's why there's over 4,000 of these fixed indexed annuities.
Right, and so there's so many out there that you have to be careful to say, all right, well, which one am I selecting?
Right.
And as we speak about diversification, well, for some people that want the ultimate in safety, they're worried about, well, what's my backing behind this annuity company? And that kind of brings us into the guarantee association.
Exactly. And when you start thinking of a guarantee association, you don't really want to place your trust in a guarantee association.
It's not FDIC insurance.
Exactly.
Let's be clear about this. Exactly. This is not backed by the federal government.
So it's an additional layer of protection. Every state is different. It varies anywhere from maybe $100,000 on the low side to $500,000 on the high side, this guarantee association protection. And it's really only protecting some of your cash value in that annuity, not all of the claims
or the benefits.
Or the benefits, the features that maybe were contractually guaranteed. So that's why you want to start with a highly rated company to begin with.
Right, because the claims paying ability of the insurance company is really the first and foremost aspect of what you should be basing it on your choice.
And really, when it comes down to good financial planning, good retirement planning, annuities should be looked at in meeting your retirement needs with just the basic guarantees first. If you can meet your basic retirement needs with the guarantees, the contractual guarantees of the annuity, then everything else is just a bonus. It's just plus.
Right. It's focusing in on what you need, what your objectives are. Can this product and this basically pool of products maybe meet your goals? And if they can, then you've locked in on the best possible.
So, Eric, are these 10 questions folks should ask before they purchase a fixed indexed annuity?
Well, they definitely should be asking
the only 10 questions, or should they be using Casey Kasem's top 40?
I think the top 40 is probably more in line.